This is what no one tells you about candlestick formations. So the first thing is that the higher the time frame, the stronger the candlestick that is printing. For example, here we have a beautiful evening star pattern and that printed on the weekly time frame. That is a very strong signal for us that on the next following week or weeks we should look for sells. And look what happened right after. We had a huge bearish push all the way down for the up following weeks. In this case, we had one candle touch our resistance right here. We had a second candle rejecting our resistance, and afterwards we had this bearish engulfing candle here. And look what happened right after. After the bearish engulfing, we had some huge bearish volume the up following days. Now the next thing is that the candlestick formations should only matter if they're close to a support or resistance level or a key level. Here also we had a form of a support, anything that prints here is relevant, and here a form of a resistance. Now anything that is in between both of your ranges should not be relevant. I will only wait until price reaches one of my key levels. So what you want to do is you want to learn how to read the story of the candlestick formations. Now a candlestick always has a story to tell. As you can see here, for an example, we had a huge bearish push all the way down below our previous support, also creating a new lower low right here, but buyers managed to push the price all the way back up and managed for price to close above our major support once again. And afterwards, as you can see, we had the bullish engulfing candle, meaning that from this support zone on right now, the buyers will take over, and as you can see, that is exactly what happened afterwards. For more information, join my free Telegram link.
Depending if it's buy side or sell side. Step 4. Once one of them has been swept, you want to be targeting opposing liquidity. So wait for the candle that swept the liquidity to close and enter on the next candle with stops covering the entire candle, targeting the next available liquidity. Now, with the blueprints of the secret 5-minute gold scalping strategy, let's take it to the charts to test it out. On the 5-minute gold chart, we mark out when the New York session starts at 8 a.m. EST. As price is approaching the New York Open, we notice two areas where there is liquidity. The buy-side liquidity sitting at the current high and the low it has just created. As the New York starts, price rallies up and takes out the buy-side liquidity. As you can see, the candle closed as a wick with its body above the sell-side liquidity. This gives us the green light to look for buys to target the buy-side liquidity. Once the candle closed, I placed a buy with stops above the 5-minute candle low, and target the opposing liquidity for a super quick one is to 2.14 risk to reward ratio. Let's see how it plays out. And after a while, as you can see, we have smashed our TP in just 30 minutes. If you want more, check out our TikToks and click on the Instagram icon for free signals and education.
How to trade options, part 1. So the first part is, what is an option? An option is something that controls a stock. You never have to buy the stock. You use the option to control it. Just as a wealthy individual would own a company, or control a company by having shares of stock, it's the same thing with an option. You control that company, you control that stock with the option. Next is, how does an option work? Very simply put, I'm going to give you an example that everyone can understand. You want to buy a house. You're driving down the street. You see a for sale by owner sign outside of the home. You stop, you look from the outside, you sneak a peek in the back. It's everything you want. You ring the bell, you go inside, you look around, you love it. The owner wants $400,000 for the house. Now, you don't have the 400 grand. You think you can come up with it, but you just don't have it today. So you ask the owner to take the house off of the market, and you're going to pay him an additional $5,000 for doing so. Why would he do that? Well, he's guaranteed that $5,000, whether you buy it or not. And if you do buy it, you're still going to pay him another $400,000. You see, you had the right, but not the obligation to buy that house over the next X days. We're going to call it 30 days at a set price, $400,000. Well, you know what? That's what an option is. That's how an option works. Exactly like that. I have the right, not the obligation to buy the stock at a set price on or before a set date. So follow along for more trading tips.